Hi, this is Randy Finney with Right Side of the Chart, and this is a early session update for Monday, February 1st, 2021. What I'm going to do in this video is a sort of a potpourri coverage, of the different indexes, sectors, trade ideas, currencies, and I'm not going to go deep in each one, so it won't be an uber long video. Try to keep this one ideally under 25 minutes. All right. Quick update on the broad market. Sell signal on SPY last week, last Wednesday, follow through so far. So that one's still on a sell signal. No changes there. We didn't really build. Well, we didn't. We're up 0.5% right now, so not so obviously not any follow through so far, but again, we're well below the trend line, so I'm gonna just say still a check mark there. QQQ, we had that sell signal on Friday. We did close solidly below the trend line. I'm referring to the trend line off the March lows, the primary trend line. A little snapback rally today, but we're still below trend. So, like I said, I wanted to see a little more downside, and I still do. We need to take out Friday's lows. So we'll just kind of put a question mark here. I mean, we'll just take it on face value for what it is, a sell signal on Friday with that red close below. And you can look at it one of two ways. If, you want to have faith in the charts, you have a kickback rally today. Q's up 0.82% as I'm doing the video right now. So you have a better entry. If let's say you wanted to take that sell signal on Friday, but were adverse to going home short because there's extra 2 nights of, I should say, of overnight risk on the weekend. There's your objective shorting up But if you already shorted, I would wait and get a little. I'm going to cover a few more things here. I'm going to cover the FANGs, Tesla, and a few other things to watch. The U.S. dollar that will help to solidify this, the case to short, because again, it's been a very resilient uptrend with dip buyers stepping in at just about any minor pullback for weeks now, even months. Last time we had decent corrections were back last year in the fall, October and no, September, October, and October, November, right there. And then last but not least, IWM small caps below trend. I'm not crazy about the lower trend line on the price channel because we had that whipsaw right there. But with that being said, it does give us this channel. We've been moving up excluding that one little pop, and that sell signal still intact there. And where does IBM or IWM go? Say to that trend line right there, and then that 170-ish level. The trend line comes also off the March lows. So we're again to kind of jump back to what I just covered. SPY and QQQ broke that trend line, and they're just below it now. Again, QQQ, we're not seeing that follow through selling, but I'm going to get to the FANGs in a second and show you what needs to happen to increase the odds that we're going to have a tradable correction. When I say tradable correction, it means lasting days to weeks, possibly more, but at least a couple, several days. Let's say 3, 4, 5 days minimum, and most likely a couple weeks, and measured in double digits. That's what I'm talking about. A tradable correction is something we can swing trade down. And the same thing with IWM. So a little bit of work to be done, and that work will be. Let's look at the futures real quick, then we'll move on to some other things. This is NQ. Now I'm zoomed in. This is an hourly chart, 60-minute candles. NQ is the NASDAQ 100 futures. So this is QQQ, if you will, except in futures, and trade around the clock. This is, or nearly around the clock. It'll shut down on Friday evening and pick back up trading on Sunday evening. And so what we had most recently, if you're actively trading the NQs, we had a little bearish rising wedge there with negative divergence. That was a catalyst for this drop, and the breakdown on the daily chart on QQQ that I showed you. Very, very near-term downtrend is bearish. That's a downtrend right here, series of lower lows, lower highs. So very near-term downtrend with the larger intermediate and longer-term trend up or bullish. What happened on Friday is we came really close enough to my first target, 12,676 right there. And when we did it, we had positive divergence. In fact, we had positive divergence on all of the futures, the big ones that I follow, the S&P 500, Russell 2000, and the NQs, this one, NASDAQ 100. And that was a catalyst for this bounce. So now the big question, this is where I think this week, I was waiting to see what happened today, and I still am, and this week. Will those sell signals be confirmed with, for example, QQQ taking out Friday's lows, more downside. If we close the week red, that should do the trick. But again, it's going to be there's a lot of days in the week, so we could have some answers today, tomorrow. Otherwise, will QQQ snap back and recover and get back above that trend line? Will some of these market-leading FANG stocks hold support or get back above the levels I'm about to show you here in just a second? So if so, because I can tell you this, we've been in an uptrend, and the MO is when you get these divergent lows like this, and back here, divergent low, that's when you want to get long. You get a divergent low, it's the start of the next trend up. So by those, by that alone, if we're in a primary uptrend with a lot more upside to come, this is when you want to step in and buy with both fists. This is when longs want to step in. I covered it last week with Apple and some other ones, and I'm going to get to those in a second. However, if these divergences fail to play out, that's a change of character. Typically, it's been these little divergent lows after a small correction were the catalyst for the next leg up. Will this be the case like that, or will we take out the recent lows, Friday's lows, and then burn through these divergences? So that's what I'll be watching for this week. Certainly not an all-in short moment, as I said last week, if you want to start scaling in. And again, if you're a bull, it's not a, hey, get out everything right now. It's kind of heads up caution. You may want to start tightening up stops or get ready to jump out of things. And this is ES. This is a 120-minute chart. You can see up on the top here. I'll go down to the hourly in just a second, but it says 6 months, 2-hour bars. So we're looking at 120-minute candlesticks. And I did that because I could zoom back out all the way to this trend line here from late October, early November. I think it was early November. And that gives us this big rising wedge. And that meshes with the breakdown in S&P 500 or SPY that I showed you. And just recently on Friday, or might have been in the overnight session, either Friday evening or Sunday morning, late Sunday night, we put in that divergent low, just like we did on NQ, as I showed you a minute ago, and that's the catalyst for today's bounce, the technical catalyst. I'm not referring to any type of fundamental news or catalyst there, just the technicals. And let's jump down to an hourly chart, and you can see that divergence. So this is short-term traders, look for these divergent highs. Even in an uptrend, it gives you a catalyst. That was a nice, so far, nice move down to capture an ES. And it is, again, like NQ, in a near-term downtrend. If we're going to see more downside, which I still favor, that's what we're going to see. These divergences will then, they could extend, and that's something to watch for. I just wanted to point that out. They're going to be in place for a little while, but if and when they're taken out, that's going to be a change of character. That'll say this will be the first time in a while where you had positive divergence on the 60-minute chart, and it was not the catalyst for the move up to the next new all-time highs. So that's what we want to look for. That's what I'm looking for. That's the scenario I believe will happen, and if it does, it'll just strengthen the case and give me a reason to, add on to more short exposure on the indexes or individual stocks. All right, let's get to, well, no, let me show you one more future. Sorry about that, because I know a lot of you trade futures, RTY, or the small cap futures, or Russell 2000 index. Same story. Just like NQ, we hit my first target there, 2054. Slight momentum overshoot in RTY, and that was a catalyst so far for the bounce. We're up on the futures, 0.88%. I don't know if you can see that down here in the very bottom corner, but there it is. So we had a much larger divergent high right here recently, and that's been playing out for this correction. So we are also in a near-term downtrend in the small caps, very near-term, with a larger-term uptrend. So again, bulls would say, okay, it's time to buy a dip, next divergent low, next move to new highs. Bears might say, well, this is the one based on what I'm seeing on the daily charts. Some of the things even on the weekly charts are starting to shape up. The VIX, put-to-call ratio, everything else I've covered in recent videos. Okay, so those are levels to watch. And again, what should do the trick, no guarantees, but I think we'll most likely open the door to probably, and I believe a more powerful thrust down, more impulsive selling would be a break of Fridays or the recent lows, whether it was Friday or in the in the weekend session here. Friday night or Sunday. And there's also reaction high. So that number's about 2029 roughly on RTY that you want to see taken out. And, if you're, don't want to take a full contract in RTY, just put an M in front of 2K, M2K. And that's for, mini Russell 2000. Imagine that's a 2. That's the micro or mini contract, and it trades off the same price levels. It just has a smaller leverage factor. So you can, what that lets you do, depending, it all matters. It all depends on your capital size, how much money's in your account. But you could then layer in, I think it's 10 contracts of M2K equal 1 contract to RTY. So that allows you to scale in, scale out if that's your thing. Okay, let's quickly talk market-leading FANG stocks. All the buzz lately has been about, majority of the buzz about what the Reddit crowd's doing. I'll get to that in a second with silver. Somebody asked about silver last week. The Reddit crowd has turned their focus to silver as of late Friday and into today, and silver's moving. I'll get to that in 1 second. But the market-leading FANG stocks, so we have Apple. Apple, what I'm watching for is this false breakout right here, break above 138, 139 resistance, which has failed. But as I said, it's not unusual to see a breakout, come back in, back test a little bit below the level. In other words, not just back test, but undercut that, clear out the stops, suck in some shorts. So where Apple, well, that was a longer term trend line. Forget about that one. This is the one I pointed out last week and before we even came down here. This is where, again, bulls should, quote unquote, should be stepping in to buy. This near term trend line right here. We hit it on Friday. I mentioned that as a buying up if you're bullish on Apple, and we're up today. We held it so far. Bulls want to see this. That would be a little whipsaw there back into the trading range. That's marked by these highs right here. And bears want to see that trend line get taken out, and that would take us down to 125.75 support, maybe get a back test of the trend line there, and then a move down to the bottom of the recent trading range, about 106.50, give or take. And basically, it's anybody's game right now, so this is one to watch. The other ones to watch, Microsoft. Microsoft had a comparable trading range, like most of the FANGs. They've been locked in sideways trading ranges for many months now. You can see this goes all the way back to June right here. Here's the months, June, July. So mid-June, Microsoft entered this trading range and has bounced down, up, top, down, up, and finally popped above it. But so far, no follow-through, and that's a common theme that I'm seeing here with a lot of these FANGs. They broke out to new highs, not just to new highs, but above a multi-month trading range, which should be and is, let me just say this, is bullish until and unless it fails. Like I said, Apple came back in. Here's a comparable trend line on Microsoft, should it come back into the trend line. But if it does, what's going to happen here? If Microsoft falls back in here and falls down to that, when I say comparable trend line, same as the trend line in Apple there. If Microsoft does that, Apple will probably have then taken out that trend line, because remember, Apple's already down there testing it. And that would be another failed breakout if Microsoft moves down here. So as of now, again, you can't spin it as anything but bullish because it's a breakout that has not failed. And there's your level. So if you're a Microsoft bull, you can step in here. There's a breakout. We have a back test close to that 228 level. Again, what I just said, if you get down into the range and you get close to the trend line, it also depends when it happens. Trend lines are dynamic. It means they're changing in value every day. And as time goes on, they come in at higher and higher levels. So you might get maybe pull back here, a back test. But anything much more than that, meaning a breakdown below that trend line, especially if it happened anytime soon, would be bearish. That's Microsoft. Amazon. We have 3 of the 5 FANG stocks out of the way now from earnings last week, but we have 2 more coming up, both of them tomorrow, and that'll be Amazon and Alphabet, the parent company for Google. Amazon's in a symmetrical triangle. Those things can break either way. Respect the way, whichever way it breaks, whether it's down or up, and until unless it fails. In other words, upside break is bullish. If it falls back down below, especially down through the bottom trend line, quite bearish. Likewise, an upside break that sticks, it could be bullish in the next catalyst for the next big leg in Amazon. I'm going to get to XRT in just a second, because there's some that one's down pretty big today, and Amazon's a component there. Next up, Tesla. Looks like Tesla has leapfrogged Facebook. Yeah, by market cap. I'm just going through my watch list on market cap, sorting the top holdings in QQQ. And Tesla, I keep saying this 800-ish level, about 802, 800, give or take. It's an 800-point stock, so 2 points on 800 is fraction of a percent. And that's it. So we broke this trend line. This one I think has a lot of downside when the market finally breaks, whether it's already topped, with this recent peak it put in, a week or so ago, or we go up for another 2 months. This one has a ton of hot air. Everybody knows it. I mean, that's no big secret. It's just when does that break? And that's, I think, the level that will do it, about 800. We already broke the primary trend line. This was my primary trend line here. Back tested it twice, rolling over a bit, but need to roll down, break 800, and then you can see potential targets all labeled here. So that one's one to watch. Facebook, not doing so hot. Again, another FANG that just can't get out of this trading range here. Pretty much Microsoft is the only one that's broken out of that multi-month trading range. And again, it's been very anemic since the breakout. We're up, but we pulled back a little again on Microsoft. So the rest of these FANGs, and this is not a good sign for the market. If they can break out and put these trading ranges in the rearview mirror, that's a great sign for the market. But until then, it shows the market leaders for months now have stalled out. And the market's kind of what's moving. A lot of what's moving lately are those little casino stocks, the things, those GameStop, things that traders are playing with, and not just those, lower quality stocks, several of which I've highlighted lately. Low price, high risk stocks. It's a risk on environment, but they're not really moving the FANGs. And since earnings, Facebook has been moving down. Big level there, the bottom of the trading range, about 245.633, a level to watch. If you're bullish, you could step in long. We were also at the intersecting 200-day. You probably can't see them. I'm just going to highlight them here instead of turning the levels up. There's the blue line here underneath there. I have it tuned down quite a bit. You might not see it in the video depending on your monitor quality. It's the 200-day simple moving average, and just above it in red, I have the 200-day exponential, and they are intersecting right now. Last time we hit them both right here, we had a nice bounce. We are at there again. So look, bulls want to step in here all the way down to 245, ish. And bears want to see those two levels go, both the 200-day simple and exponential. I have them both on my chart because some traders watch one, some traders watch the other, and therefore I like to watch them both. And they're going to, roughly come in together. And right now, again, they're crossing, they're intersecting. I don't know if you can make them out. So levels to watch right there. And again, the bigger picture, guys. I talk about, I sit here and talk about these levels, but the bigger picture is which way are all these FANGs going to break? Ultimately, to the downside or the upside. Microsoft broke out, and it's above there now, but it's the only one. Apple broke out, but it fell back down to that range. Netflix, if you remember, same thing. Had this multi-month trading range. You can see it boxed in. It's boxed right here. Simple stuff. Get to the top of the range, sell your longs, or go short, buy at the bottom of the range, cover shorts. We popped it, but fell back into the range. Hit the midpoint the other day, as I mentioned, the midpoint, that yellow line off an axis support. But we're back in the range. So should we break the midpoint? That will open the door for a move to the downside of the range. And then again, ultimately, will it be just more of the same, where you have the wash, rinse, repeat? Or again, longer term, which way does this one in the majority of these market leading stocks break? And then finally, Alphabet, again, tomorrow reporting. And the technicals tell me it, and I've said this often, if it's, in other words, I can't make a clearly bullish or bearish case, and earnings coming up, it's a crapshoot. It can go either way. And of course, if you're in a bull market, an uptrend, then that either way, that tilts the odds to the upside. If you're in a bear market, it's going to tilt the odds to the downside. But we're in a primary uptrend. However, in this case, we have a clearly bearish chart. We have negative divergence, this rising wedge I just highlighted here. There's your divergence right there. And, just like right here, you had uptrend line, minor uptrend line there, negative divergence, there was a correction. There was negative divergence, rising wedge, correction. So this tells me whether the initial reaction is positive or not. Sometimes you get positive pop on earnings and they fade it. Apple, take all the FANGs for example. They just reported and they've all sold off since. Other than Microsoft's, yeah, actually Microsoft did. It's given back some. And there it is. So larger sell signal would come on a break below the primary trend line. First stop 1710. Get a buyer step in there. Ultimately, then if 1710 goes, more downside there. So that's what to watch for on Alphabet. Not just tomorrow. Remember, they report tomorrow after the close, so we won't know until Wednesday really where this one's going to trade. So again, this week I think is going to either help to confirm, if we get more downside, confirm those sell signals that we have on the indexes, and then strengthen the case to add on positions for swing shorts, or foil those breakdowns by having QQQ move back up above the trend line, and maybe SPY goes up for a back test or something like that. Okay, quickly, let me go through a few. Let me cover a new one. XRT, I noticed today, XRT is lagging quite a bit. That's a big move. XRT, for those not familiar, that's the Spiders S&P retail ETF. So these are retail stocks. Amazon is a component. Amazon's fact is is one of the biggest components of the XRT. I think I had the weightings in here somewhere. Whatever. Amazon is big one in there. What's going on there? Well, it had a near parabolic top. That's not healthy. And parabolic runs like that when on big volume, this is indicative of a potential blow off top right there. So one to watch. This trend line is I'm not crazy about it. We only have 2 reactions. I could also maybe do another trend line here, a smaller one, but let's just see where this goes. Right now it's an area of consolidation, but let me run through some of the components of XRT. And again, I cannot impress this enough. This will make or break it, most likely, where Amazon goes after they report. And I already covered this. Amazon's in a symmetrical triangle pattern. Bullish, solid break and sustained break, bearish if it's a solid and sustained break to the downside. Big level, as important if we break to the downside there. I have it color coded in yellow because it's more significant. 29.43, 50-ish horizontal support. And if that goes, then it's, I think, lights out for Amazon, for the sector, and for the market, because I really doubt we're going to see Amazon do this and the major indexes climb at the same time. So again, goes this way, extension and continuation of the rally. Goes that way, that's bearish. A few other, now what's going on? Amazon's up today, as I just showed you. I don't know if you're looking, 2.7%. So that big drop in XRT obviously is not part of Amazon. And Amazon, as powerful as it is, it is not the market. I believe, unless anything's changed recently, Walmart's still the world's biggest retailer. And this is clearly bearish chart right there. There was your primary trend line, negative divergence, everything you like to see to go short, just like we had a divergent high right here. That was the catalyst, and now big blow off candle. I think that came on earnings, and there's a great example. See how that red candle is real tall? Means they rallied it the day after earnings. I believe that's what that was. Usually you get something like that. And then from there, that was a peak, and the stock fell 19% right there. Breakdown, back test. I mean, this is just simple TA 101 stuff. Breakdown, back test, and you can see how we kind of hung here for a little bit. There's why traders look for these reaction lows. After the breakdown, there was a reaction low there. We hit it again right here, and the trader stepped in and bought. But just Friday, you can see they took out that those previous reaction lows, and the stock is continuing to fall. I don't see anything stopping this stock right now. I mean, of course, anything's possible, but I don't see a lot of any decent support until down here. You've got the 200-day moving averages a little below. They are roughly the 200-day simple and exponential, about another 2.5–3%, and then some price support. But you can see some potential targets. I just wanted to say, okay, that's a bearish chart. Looks like more downside to come in Walmart. Costco. Primary uptrend line is in purple. Costco has just broken it today. Nope, Friday. Friday it broke down, and it's continuing to move down today. Target breakdown last week, back testing below trend. So quite a few of these retail stocks. And again, I'm going through the components of XRT, And I'm just clicking through. If I don't see anything on one, I'll just move on. Dollar General breakdown recently, and is starting to build momentum to the downside right now. WBA, that's Walgreens. CVNA, Carvana, there's another one. Breakdown backtest. So these could be trade ideas for you as well. A little bull flag or bear flag type action, a little bearish pennant right there. Maybe. I don't see much of a flagpole, but it is below trend, so it's an objective short. And then where do I want to wrap it up here? Maybe Best Buy. Best Buy, divergent high right there. So, here's a stock like several that I just showed you in the retail sector that have topped, put in divergent highs, broke down, back tested, and it's been moving lower. You had a little, positive divergence right here that it was a catalyst for this bounce, but that bounce so far was just a counter trend bounce. Now, what will tell us that this stock is in a new, larger downtrend? A break of these recent lows. Then we'll have, a series of lower lows and lower highs. Right now, you really can't call it much more than a correction. Okay, and on to some of the dollar sensitive trade ideas. US dollar put in this divergent low. I've been bullish looking for a rally in the dollar, and we've had it. It's just playing out a lot slower so far than I would expect. These are, so far, we need to hit my 91 target, 91.081, and that will keep this uptrend intact. So in other words, we have a near-term uptrend since that divergent low right there. And again, if we break 90, 91, 80, 081 with conviction, that would be even more bullish for the dollar and show more upside. I'm only looking for, in the bigger picture, a counter trend rally in a bear market in the dollar. I think dollar ultimately heads a lot lower. Bullish on the euro against the dollar. I think the euro will rise as the dollar falls, and this will have an impact on dollar sensitive assets. However, as of now, we're kind of just floundering around. Call it what you want, near-term upturn or not. It's more of a sideways grind, sideways to slightly up. I mean, there's, that's your price channel, if you will, like that. So, again, this will, if we're going to get a decent correction in the market, it will align most likely with a breakout in the dollar. No guarantees, but most likely that'll be the case. Otherwise, maybe this was just a correction in the dollar. We head back down lower. Market goes on to make new highs. Remember, there has been a very strong inverse correlation with the stock market and the U.S. dollar for quite a while now. I've laid that out in quite a bit in recent videos and charts posted on static chart images on the site. And one of the trade ideas there that may, is most likely impacted by the dollar, usually is crude oil and the energy stocks, and there's XOP. I've covered it so much lately. First objective short there at 71.53 resistance, and then since then additional entry points. And the big one is when we zoom down to the 60-minute chart, which I just did before we were on the daily, is this level right here. That was my first target on the 60-minute chart, 61.73. We hit it again on Friday, and we need to take it out to open the door for the next leg down in the energy stocks. This is XOP, exploration and production, oil and gas, E&P stocks. And then again, if we can take out 69 with conviction, that's going to be bullish because it may tell us the correction's over. I still lean towards that scenario, the downside there. We just need everything to, kick in. We need those breakdowns to occur right there. And of course, DRIP is a proxy that I highlighted for it. It's the 2-time inverse of XOP. So if you want to go short, and DRIP needs to pretty much take out that 21 level. It's been knocking there. Let's get this little ascending triangle pattern. Needs to pop that, and then should go on to hit my first target and ultimately my current preferred swing target. And that again was the percentage gains from where it was first highlighted as a trade idea. Be about a 60% trade, even if we just get to my first target, 35. But I think if we pop this range, this triangle, and hit that first target, I do favor a continued move up there to T2. Here's a quick update on GameStop for anyone playing this one long or short. We call these casino trades. Took out this 250 level that was price support, previous reaction low today, and back testing right now, and below the trend line. And so that would indicate, now I can add a BOD trend line if I wanted to right now, benefit of the doubt. No, I'm going to stick with the other trend line I had that catches more reaction highs, a lot more back here, a little overshoot of that one, and so we're below trend. So I think Of course, way too early to say, but I think the end of the run is over in GameStop. I know there's still a lot of hype about it, but I think that Reddit crowd's moving on to the next big trade to, focus on silver now, AMC, and some other. And so, yeah, let's look at AMC for you. For those of you interested, there's a comparable trend line. By the way, that was a 5-minute chart we were just on GameStop, the one I was covering before. Here's this comparable trend line. This trend line, it's going to show different if I shut off. I have the after hours and pre-market trades open. There's a line here that delineates Friday's after hour session in gray, shaded area right here, all these trades. And then this is today's pre-market session. And so that's the trend line I'm using here. If I turn them off, it just everything changes on this platform. But there it is, because you're not showing these trades. But that's it. We break that trend. You can see $11 first target, and then I don't even have a second target until down to about $5. So that's when it breaks. I know that the Reddit crowd will say this one and the other one's going to the moon, going GameStop to 1,000 plus. But we'll see. I think, like I said, I think GameStop, end of the run's too overhyped now. That's just my opinion. And we'll see on AMC. I just gave you levels if you want to trade it. Whether you want to go long on these support levels, pullbacks of support, or break on the drop of. All right, I'm going to wrap the video up here. I'm just looping back to oil. I should have covered that with XOP and the energy stocks. Oil continues to trade sideways right above my big level, 51.80-ish, call it, give or take. There's been a few brief interperiod pops, but that's about it. 51.80. If you are short the energy stocks or crude, that's what you want to see, a break of 51.80. I could maybe even move that target down a little, whereas an upside break is going to be bullish. So that's it. Simple stuff. Get these trading ranges, and the longer they last, I always say it's like a coiled spring building energy, and the longer it lasts, it's, well, in this case, a spring would be being expanded, but imagine it the other way around. You're compressing the spring because you build up that energy, and then boom, boom. So this is the way I favor, because I think we'll get a breakout in the dollar, another thrust up, and that should correlate downside in crude oil, which would then spill over to the energy stocks, but it can go the other way. I mentioned that before. We are at support. A lot of those energy sector ETFs and the individual stocks hit support recently. XLE, for example, this is a big one. We had the primary trend line breakout recently in a back test. So, looking at glass half full, I said, man, if you're bullish, go long. And you have 38.30 support just above. So this is a great long entry for those that are bullish on energy stocks. But if those back tests don't hold, then we're going lower. And that's the way I'm leaning right now, based on everything else that I've covered in not just the energy sector, not just the US dollar, sentiment and extremes, and the broad market as well. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.